Ladies and gentlemen, thank you so very much for tuning in. Eric H526, Luke St. Martin, my two great moderators, the best moderators in all of YouTube. Hello to my super chat. I can't do this without you. If you'd like to give me your thoughts on the impending stock market crash under Biden's watch, in which he's completely ignored, let me know via super chat or in the chat room. JG, hello. I hope all is well. Always a pleasure to have you here. Everyone here, thank you so very, very much. Kristen, Gus, everyone here, Marcus, JG, thank you. Ladies and gentlemen, I want to read you this. And this is a very, very interesting FDIC.gov 2021 risk review. Banks remain exposed to risks in corporate debt markets through direct loans and lines of credit to corporations, holdings of collateralized loan. What happens, do you think, when the stock market tanks and you have hedge funds that go under? And that affects every aspect of the economy. Well, eventually, in addition to the risky investments linked to derivatives trading, the derivatives trading of hedge funds, and we saw that with Archegos. Trump predicted all of this last year when he said Biden's going to tank the stock market and the economy. And you can look. This is the Federal Deposit Insurance Corporation Risk Review 2021. It's a PDF. I'll put, basically just, I'm not going to put it in the description, or I'm not going to give you the link, but you can just Google. So hit subscribe to this channel. Nobody's talking about this. 2021 Risk Review FDIC. Or you can Google Bank Exposure to Risk 2021. Okay? Banks remain exposed to risks in corporate debt markets through direct loans and lines of credit to corporations. Okay? There's already a supply chain problem, a labor shortage, inflation at 5.4%, and margin debt at an all-time high, in addition to the consumer and producer price indexes at highs we haven't seen in over a decade. So I gave you the economic indicators. We're going to you-know-where in a handbasket, and AOC and Bernie Sanders and everyone worried about the working class and the left and the socialists and the communists. You better believe they don't care at all about any of this stuff. They don't care at all about any of this stuff. They're simply going to complain and pretend that they're on the side of working people. But when it comes to actually foreshadowing all of this, they're not going to even touch it. They're not going to even touch it because it's Biden's administration, and they can only see so far ahead. So let's look really quickly. This is a really interesting. So banks remain. Okay, so credit risk. Banks are exposed to an array of credit risks. This is, by the way, within the umbrella, or this is, by the way, correlated directly to the fact that one hedge fund went under and 3 or 4 banks lost $10 billion instantly. Small hedge fund. Now, their regular banking, like the way that banks usually just make money, they're not supposed to have anything to do with risky investments or buying and selling derivatives and all of that, but they still are. They have the brokerage side of things, which should have been taken care of. They should have reinstated Glass-Steagall. But in 2020, this is from the FDIC. In 2020, these risks intensified as the economic contraction unfolded. By the way, that was because Democrats didn't listen to Trump and wanted to get him out of office, so they tanked the economy on purpose. They didn't do so simply to save lives. They did so because it was their time to implement the most hysterical and paranoid reaction to a public health crisis that should have been addressed in the manner that Sweden addressed the public health crisis. So, you didn't have to prevent people from working for a year. That was not something you had to do. It was a choice. It was a choice that resulted in a catastrophe. We are now experiencing the consequences of a self-induced catastrophe. And Trump talked about this. But here, credit risk. Banks are exposed to an array of credit risks in 2020. These risks intensified as the economic contraction unfolded. Banks remain relatively resilient, partly because of government support extended to business and consumers most affected by the recession. The recession was self-induced. The stimulus payments, when you prevented Americans from working because of sciency and safety, you prevented Americans from working and gave them crumbs in the form of a stimulus payment. You pumped money into the economy and simultaneously kneecapped and ruined your economy. Then you have to deal now with the consequences of inflation, labor shortages, even though there are job openings, because you forced people out of careers and jobs that they had, that they liked, that they were at for years, either because the employer went bankrupt because of Democratic policies and the hysteria and paranoia of media, gleefully tanking, well, we spoke to the experts, and the experts say, well, you can't open up the economy. And Biden is completely clueless, focusing on everything but economic growth. So once the stock market crash takes place, you're going to have banks exposed to all of this because people are not going to be able to pay back these loans, or businesses. However, institutions with elevated levels of credit exposure to affected sectors are potentially more vulnerable to market disruptions and could present risk management challenges. Okay. Consumer debt. Conditions for consumers deteriorated with the onset of the pandemic as business closures contributed to double-digit employment. Notice that when the FDIC is evaluating risk, notice that whenever you hear about, like, when they were trying to get Trump out of office, it was always, we have no other choice. We have no other choice but to shut down the economy. We have no other choice but that. That is referred to as the pandemic. Two brain cells, hello. That's referred to as just the pandemic. It's not viewed the way it should be, as our response to the pandemic. Energy. The energy market deteriorated sharply in 2020, but banks with exposures to lending, in this sector remain resilient. Commercial real estate. The pandemic challenged commercial real estate market conditions in 2020. Housing. Housing activity recovered strongly in 2020, but that too could be somewhat of a bubble. Very likely is. Leveraged lending, and by the way, this is all like more positive than the reality. Leveraged lending and corporate debt. Corporate debt markets experienced disruptions early in the pandemic, but the Federal Reserve actions helped to restore stability to bond and leveraged loan markets. Well, what happens when corporations can't default on their corporate bonds or are forced to go bankrupt. Then what happens to the corporate debt market? Market risk. The low interest rate environment presents earning challenges to banks. Then you have, this is very interesting. Then you have, let's see. You have a whole bunch of risk, obviously associated with the hedge funds that these banks are tied to. But I want to see if this FDIC report, mentions that. I don't think it mentions that for some reason. Interest rate and net interest margin. Let's see. The banking industry saw unprecedented deposit growth in 2020 as increased shifted consumer and business spending and saving behavior. So this is like really a lot more rosy and positive than you would think. Interest rate risk and net interest margin. Sorry about the OBS going in and out. So, Bloomberg credit risk in 2021. Prepare for more unknowns. Key credit drivers included industry structure challenges, reduced growth trajectory, impaired operating efficiencies, regulatory focus shifts, limited financing availability, substantial negative impacts on energy, travel, leisure, and hospitality sectors, while retail store weakness accelerated further in 2020. Many of these defaults resulted in lower recoveries for investors. But we haven't really rebounded. So when the market realizes that all the problems we had in 2020, many of which are worse now in 2021, like the supply chain issue, or a labor shortage that shouldn't really be a labor shortage, or the consumer price index or the producer price index that are higher than they were last year. Could you imagine? Thank you, Todd. And so it's like, you look at what they were. You look at what they were focused on for 4 years. Look at what they're focused on now. Look at what they're focused on now. It's like they're focused on anything but economic growth. Anything but economic growth. They don't care about economic growth. They're not focused on that. That's why you like Biden's speech had nothing to do. Biden's speech had nothing to do with. They had nothing to do with growing the economy, addressing issues like inflation, or the biggest job reports miss in recorded history. So let's see. Let's read this. This is a consulting firm, a 2021 risk agenda for board of directors at U.S. banks. So, this... I don't know if I'll read this because I don't agree with any of it, so... Let's see, really quickly. I won't even read this. Well, this consulting firm is completely out to lunch. So you look and it's like all the risk reports, analysis, they don't address the two issues that we talked about. Instead, they're focusing on climate change, which will have nothing to do with the stock market crash. Nothing. Fed privately presses big banks on risks from climate change. Like, well, you have greater risks from derivatives trading where you don't know the debt, the true debt owned by banks and hedge funds. Ethel, similar. I don't think as much, not nearly as much. I don't think that they're a lot more conservative. Let's see here. So let's see. Top 10 operational risks for 2021. This is risk.net. It's a pretty interesting site. The 7th. It should be towards the top. Organizational change, geopolitical risks should be towards the top. Employee well-being. Well, they're not talking about any of the issues that we're talking about here. Hot housing market lets banks sell mortgage risk. So, let's see. Banks are now bundling and selling default risk on mortgage loans to yield-hungry investors. So the housing market, I don't know how that's not going to tank if the stock market tanks. So... like U.S. banks to reveal exposure to climate crisis for first time. How on earth is that? Why is that more important than the supply chain issues we're facing right now that have nothing to do with the climate issue? Everything like... okay, 4 risks that could make... here, this is CNBC. 4 risks that could make 2020 the toughest year for banks since 2009, says S&P. This is November 17, 2020. So let's see if we're actually seeing these things play out. The ratings agency currently has a negative outlook for about 1/3 of global banks, with many downward revisions taken in light of the pandemic, which, by the way, the response to it is the issue, not the health crisis itself, and the oil price shock earlier this year. S&P's base case for a sharp rebound in global growth in 2021, and in a series of reports published Tuesday, the agency suggested that this, in combination with a strong bank balance sheet, but we don't know how much. We don't know the true exposure of banks to hedge fund risk, because the hedge funds don't. They have there are loopholes where they don't have to disclose to regulatory agencies how much debt they have on hundreds of billions of dollars in very risky derivatives trades, because they don't own the underlying stock. That's how Archegos got away with not showing its actual balance sheet, because they didn't own the stock with margin. They owned the contract on the underlying stock through margin or debt, and they didn't have to disclose how much money that they borrowed for that contract. They only had to disclose how much money they borrowed if they owned the stock. So when Viacom went down, regulators didn't know that they were over-leveraged on Viacom or any other stock because they didn't own the underlying stock. They just owned the contract. And they weren't mandated to inform regulators about the money they owned in debt. They weren't mandated to inform the SEC or the Federal Reserve on how much debt they had pertaining to the contract for difference derivatives, because they didn't own Viacom. Had they owned the actual stock and not just the contract where they would bet on the fluctuation of the stock, they would have had to inform regulators on how much debt they actually had. So again, this is not really accurate. Strong bank balance sheets, support from authorities to retail and corporate markets, and regulators' flexibility should limit further downgrades next year. Well, we're in a worse situation. S&P Global Ratings warned that banks could face their toughest year since the aftermath of the global financial crisis, with 4 key risks hanging over the sector. So, this is before all the problems of this year. Let's see. They're so out to lunch, The Economist. Could climate change begin a financial crisis? Well, no, but everything else that's going on could. Maybe you should focus on that. No, wrong. They don't want to do that. So it's you look at Roger Rabbit starting it off. Goodman, I believe we can agree that the climate is changing. Somehow the Dems believe that their policies are actual solutions. OMG, help us. Roger Rabbit. I mean, I don't doubt that long term it's an existential issue, long term, but they can't tell you when the planet will end. They can't tell you how exactly their policies will slow the pace of climate change. They can't tell you anything. All they can tell you is listen to us, experts, listen to us, experts, listen to us, experts say, listen to us, experts say, listen to us. So that's, Amanda, hello. Roger Rabbit, thank you so very much for your kind words. Always Roger Rabbit and your encouragement. Thank you. So, the banks, interestingly enough, if you look, there's a great article. Where is this article? A great article on... All right, where is this? There is a great... Banks such as Nomura and Credit Suisse offer broker services to clients such as Archegos, lending them money to buy shares and other assets while also processing their trades. So the banks lend money to hedge funds. That's what I was looking for the past half hour. Oh my God, why did I waste so much time? Roger Rabbit, thank you. To my super chat, thank you. Can't do this without you. Banks such as Nomura and Credit Suisse offer brokerage services to clients, such as Archegos, the hedge fund that went under, lending them money to buy shares and assets. What a racket. They lend them the money. So they buy these stocks or derivatives on borrowed money from the banks. Then when they go under because they can't pay the banks back, the banks take a hit, and the hedge fund goes under. All the while, they're making a commission on the trades of the hedge funds. I mean, it's such a racket. It's unbelievable. Such a racket. I mean, it's like, then you have finance. Here's a good article. The funds, okay. The funds also may have used contract for difference, a type of short-term derivative that allows traders to bet on the entry and closing price of a given stock. But because both derivatives do not involve actually owning the shares themselves, Archegos was not required to disclose those positions. Yahoo Finance. Okay. And this is IG.com. When you're hit with a margin call, you can either deposit additional cash, liquidate unmargined securities, or sell your stock. Archegos couldn't meet its margin call. This led to intense selling pressure in a number of names that Archegos had taken concentrated positions in, as its lenders dumped Archegos positions at a pace described as unprecedented. This could happen at a catastrophic scale. If you're having trouble sleeping, this will put you to bed. Although, hopefully I'm wrong, but God forbid, this could be a catastrophe. Biden doesn't care. Hey, man, when it happens, he'll be like, should I speak now, man? Hey, man, should I speak? Can I speak now? Can I answer questions now, man? Can I answer questions? Am I allowed to speak now? Are you going, hey, man, I'm talking to you, man. Come on, man. Can I speak now? Okay, let me know when I should stop speaking, man. Everybody, 30-40% market and drop, man. The market dropped. Okay. Deal with it. It's like, deal with it. You snooze, you lose. Not my fault, man. I told you I'd talk to you about climate change. I told you this would happen. Like, what are you talking about? This has nothing to do with climate change. We're talking about derivatives. Nothing to do with climate change. Hey, man. Stop it. Stop the selling, mans. Stop the selling, mean people on Wall Street, man. Stop it. Speak to my son, the artiste. He'll help you, man. Paul Bartlett! Thank you, Paul. Thank you, Paul. Thank you so very much, Paul. Thank you. Paul and Roger Rabbit. Everyone here, Scorp Target, everyone here. When the stock market tanks, and it'll be because like hedge funds borrowed money from the banks that are processing their trades, and then the banks call them to get the loans, to get money owed from them, to get their money back after they had given the money to buy and sell risky contracts and derivatives and securities. And these hedge funds will then go under because they can't pay the loans back to the banks. The banks will then potentially go under and then need to be bailed out because of these risky investments that aren't really seen on the balance sheet that they show to the government. And then Biden's going to say, I told you, man. You didn't buy the Tesla, man. And so don't say I didn't warn you. You should have listened to my son, the artiste, the energy guru of Ukraine. Can I speak now? You want me to get off? Who can I point to? You over there. Yes. Mr. President, hedge funds went under, and the banks that gave them money are also going under. What are we going to do? The reason is going on because of climate change. Honestly, yeah. I do. They're going to pull his mic. They're going to pull his mic. He's not going to be able to speak, and that's it. That'll be day one of the financial collapse. They're not focused on any of this. They don't care. You understand? They don't care. They do not care. Bendy! Oh, Bendy! That was for... It'd be like, Bendy, it'd be like, Mr. President, the Dow and the NASDAQ and the S&P all fell 30% today, and they might go to 40% tomorrow. Mr. President, what are we gonna do? Knock on wood, man. That was 4 or 5 days ago, man. That was 4 or 5 days ago. No, that was today. I'm not listening to you, man. You know the deal. Hey, dog-faced pony soldier. Reporter, don't get wise with me, Bernays. What movie? Please, come on. Don't get saucy with me, Bernays. What movie? Anyway, that's what Biden will do. And then the Washington with Biden's heroic press conference to rally the nation under Trump's and they'll call it Trump's stock crash. I'm like, what? What are you talking about? Bendy! Scorp target. Come on, man. Hear me out, man. The plane. Watch out for the plane, man. Come on, man. I told you. You have to just relax. Take it in stride, man. So you lost a little money, man. So the market tanked, man, and we're all going to you-know-where in a handbasket, man. So what? There are bigger things like climate change. Okay. Bigger things. Just relax. He doesn't care. Scorp target. Ben D. Libra, everybody here. He doesn't care. 0 hour hello. He doesn't care. To my viewers in Korea, hello. Thank you for watching. God bless you. Thank you for watching. To my viewers around the world, our beloved president doesn't care about pretty much anything except exerting his authority. You respect my authority. Eric, what Eric H526, what character? Who am I imitating? You respect my authority. I mean, Paul, thank you so very much. The man doesn't care. He just is going to, just like Scorp Target and Ben D said, that was 4 days ago, man. No, it was today. Fed warns of hidden leverage lurking in financial system. Lurking, man. Central bank says Archegos collapse shows it lacks tool to see full extent of risk-taking. We lack the tools, man. I mean, this is all Trump's fault, man. Trump's fault. Did you see with the Israeli Prime Minister Bennett? He fell asleep. And the poor Prime Minister is like, and you see, like, he has the mask here. He's like, he can't be bothered. If you're speaking to him, exactly, Cartman, if you're speaking to him and it's nap time takes precedence. So you're gonna have to wait. World leader, nap time. World leader, nap time. Nap time. I mean, it does. Look. Did Biden fall asleep? Did mashed potato brains fall asleep? Fact check. Dun 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 dun. Fact check debunks claims that Biden fell asleep. Dun 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 dun. Fact check. Fact check. Fact check. U.S. president did not fall asleep. This is like when they're like, wrong. Fact check. No, Demon wasn't around during Biden's speech. Why are these bizarre things? Why do they need to be fact checked? No, mashed potato didn't go to the bathroom during a diplomatic meeting on tape. No, he wouldn't fall asleep. No, there's no demonic presence. No, Bernie wasn't cheated. No. Oh, gosh, thanks for setting the record straight. I thought that there was a demonic presence, and then he did fall asleep, and I thought Bernie was cheated. Luckily, that's not the case. Fact check. Right-wing organizations think that Biden fell asleep. Fact check. Obviously, if you think that he did, even though the actual tape shows he's closing his eyes for about a minute, less than a minute, let's just say, at least 10, 15 seconds. I'm just getting it all in. AP News, Biden didn't fall asleep during... Claim, image shows President Biden sleeping during high-level talks. AP assessment false. News coverage of the meeting shows Biden was awake and engaged. The entire media turned into Baghdad Bob. Facts, Biden and Bennett met on Friday. Discuss a lot of topics. It was fine. He wasn't even sleeping. Okay? He wasn't sleeping at all. He was resting his eyes to take in the information. Imbeciles. He wasn't even sleeping. Fact check. Why do we need to fact check mashed potato brains in this manner? Maybe because we've never seen this before. We've never seen such lunacy. Fact check. No, Demon wasn't near Biden when he was speaking. Our independent fact-checking organization says no. Yet again, a false narrative from the Trump right, Trump extreme, Trump diabolical, bad people. And if you believe that stuff, you're just as bad as them. Fact check. So, Biden looks down at his lap several times, and including when he's listening and reading from his notepad. The misleading image was captured in one of these moments, giving the impression that Biden is not fully attentive or asleep. It does look like he's asleep. You can take like really short naps, like even like 10 seconds. You can kind of take you can have like a dream within 10 seconds. Believe me, he's probably thinking of unicorns and who knows what else. Biden, tapioca. During the 14-minute video taken during the meeting, Biden looks down at his lap several times, including when he's listening and reading from his notepad. The misleading image is captured in one of these moments, giving the impression that Biden is not fully attentive and asleep. Will they stop at nothing? Oh, the humanity. To make people think our beloved president would sleep, even though he slurs his speech and who knows what he's doing with his leg hairs and gives us a whole bunch of stories that are nauseating. At least he's not Trump. At least he's not Trump. Oh, thank you, Biden, for not being Trump and falling asleep, but not really falling asleep. Well, that answers it. Go look at the tape yourself. I actually looked at it this evening. It's pretty hilarious. Fact or fiction? Was Biden sleeping? News at 10. USA Today fact check. President Biden did not sleep. It's so incriminating. They should not even fact check and just not talk about it. Because what they're doing is reinforcing the notion that like all of this actually did happen, but they're really embarrassed, so they have to kind of pretend it didn't. No. I'm looking at it on RT. The Russian. No wonder the Russians have him sleeping. RT. Biden sleep. Sleepy. Sleepy time. The Putin says, did Biden fall asleep? I'm looking at it right now. This is 22 seconds. He's not looking at any notes. He's looking down. and the Israeli prime minister is trying to look at him. And he's just like, it's 22 seconds. He hasn't even moved his head. Oh my God. Hey, bring it. This is fantastic. You think I care? What do I care? God forbid if the stock market does crash, he's going to be championed. Biden, in a heroic show of defiance, brings the country together as he completely ignored the stock market crash and then just barely says anything. This is Biden's moment to shine. It's like the news, basically every headline is the opposite of what the headline states with Biden. It is the same with Trump, although the underlying theme with Biden is that we have to protect him at all costs, so... Ladies and gentlemen, thank you so very much. To my super chat, thank you. This is fantastic. I was resting my eyes with the thing. You know the thing. Come on, man. One of the comments here. I was resting my eyes with the thing, man. Come on, man. I mean, come on, man. Ladies and gentlemen, thank you. To my super chat, thank you so very, very much. Mikhail, hello. Ladies and gentlemen, thank you. I'll see you tomorrow, everybody. Have a great, great evening. God bless. Eric and Luke, thank you. Be here tomorrow. I might talk about my thoughts on Biden and cryptocurrency. So you might find it interesting if you're into Bitcoin and crypto. See you soon, everybody. I'll see you later. Thanks, everybody.